Hello, and welcome to Virtual Investor Conferences. My name is Jonathan Glotty, and on behalf of OTC Markets, we're very pleased you joined us for our next presentation from Kelly Partners. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings through the Schedule Meetings tab found on the conference platform. At this point, I'm very pleased to welcome Brett Kelly. He's the founder and chief executive officer of Kelly Partners Group Holdings, which trades on the OTCQX Best Market under the symbol KPGHF and on the ASX under the symbol KPG. Welcome, Brett.
Well, good morning and thank you for joining us. It's a privilege to have the opportunity to present Kelly Partners Group Holdings to this virtual conference. I'm going to spend about 20 minutes just giving you a basic outline of our business that I hope will encourage you to do your own detailed research to better understand the business. Since June 2006, when we commenced the business, we had the aspiration to build Australia's global accounting firm for private business owners and to really build a 100-year world-class business. In June 2017, we listed on the Australian stock market, and people that invested with us at that time, including dividends, have earned nearly 8 times their money. We think that that is as good a performance of any listed company that we're aware of anywhere in the world in our industry. My name's Brett Kelly. I'm the founder and chief executive officer of Kelly Partners, and it's really great to be with you today. So I'm just going to share sort of 7-part presentation. So why does the business exist? What problem are we trying to solve? How do we do that? What are the results to date? Share a few highlights, give you our view of the investment thesis, and demonstrate how we're planning to continue to grow the business. I direct you to our website where we have an owner's manual that we based on the Berkshire Hathaway owner's manual. We've published now the 3rd version of this. We keep updating it, but it really just outlines the principles that we operate the business with respect to our public shareholders, who we regard as partners in our business. As Charlie Munger said, all Berkshire does is copy the right people. And so at Kelly Partners, we've adopted since inception that mindset: find the right heroes and do what they do. So for us, it's Berkshire Hathaway in terms of we're a listed holding company, and we have permanent capital, and we have a 100-year view of what we're doing. LVMH buy old businesses and re-energize them, modernize them. Constellation Software, programmatic acquisition, and Ogilvy and Accenture proving that you can build a global professional services brand. KPG in 10 seconds. Investors have asked me since pre-IPO, Brett, can you explain the business in 10 seconds? And typically investors are really interested in the numbers. The numbers just simply demonstrate that the business has a 30% revenue CAGR since inception over nearly 18 years in June. That we've got industry-leading EBITDA margins, nearly 2 times the average of the US market and the Australian market. Parent NPATA continues to grow. Our return on equity is, 35%. Return on invested capital is consistently over 20%. Our gearing's very moderate, under 2 times net debt to EBITDA. Our cash flow is continually growing. There is virtually 100% cash conversion. So as you can see in the bottom right-hand corner, the business has doubled 5 times since inception, on average every 3.2 years. And that the revenues in the business are 99% annuity-based. We have 34 locations, 28 in Australia and 6 outside Australia, Hong Kong, India, and 4 in the United States. And the share price appreciation, for those that are interested, is really just followed the growth in earnings. We have 45 million shares on issue. When I'm asked what's the best question to ask a CEO, certainly one good question is, how many shares do you have on issue? We don't use equity issuance to fund acquisitions. essentially we do micro leverage buyouts on the assets that we buy into. You can see the recurring revenue growth and the owner earnings growth since IPO, and the consistent and reducing level of shares on issue. So why does a business exist? Well, my dad had an accountant who embezzled money from the business. I saw the impact on my dad and thought we should do something about that. So we exist to help our people first, and then our private business owning clients and the communities we work in be better off. We call better off, healthier, wealthier, and wiser. We know that accountants sit in a privileged position and can really make a difference if they choose to. We're animated by three big values: wanting the best for others, keeping our promises, what we call doing what you say, old-fashioned idea, and then one team working in one best way. So people knowing that a team can do more than an individual. And we have a clear vision to be the first choice employer of the most talented people in our industry, and to be the first choice accountant to driven private business owners in Australia and anywhere that we operate. So what are we doing? It's a mission, values, and vision-driven organization. Our industry largely has, our large competitors are very light on mission, values, and vision. We know that that's a place to attract the right people that share those big ideas, because our business relies so much on unlocking the discretionary effort of talented people. Clear strategy focused just on the small and medium-sized owner-operated businesses. We invented this thing we call a partner owner-driver model, where we buy a 51% interest in the businesses. It's not a roll-up, and the operating partners own 49%. We've got quality leadership and management expertise through a 36-person central team that we leverage into these businesses to improve their operations, double their profits, reduce their working capital by 2/3, and give partners 25% of their time back. There's a proprietary client system, a single brand, and a growing offering of services. In terms of how we do that, just a clear strategy. So become top 10 in Australia and then grow globally. We're on track. We're about the 16th, 17th largest firm in Australia, on our way to being in the top 15 and then the top 10. And while we do that, we're planting seeds to grow globally, and particularly focused on California in the US and Texas. So our difference really is that we have this values-based system that aligns and animates the entrepreneurial energy of an accounting group with a clear business model, a 51-49 partner owner driver structure, and a central progress team that are experts in the operations of accounting firms and have been doing that with me now for 18 years. We have real expertise in terms of programmatic acquisition. We've done nearly 50 of those deals in 18 years, more than 80 partners as part of those deals. There are 50,000 acquisition contacts in our database with nearly 200 leads, ensuring that we can continue to grow the business as we go forward. And recently we bought a 51% interest in Kudos International, which is a global network of 60 firms in 45 countries. We compete by combining activities in a unique way, which is really based on the work Michael Porter has done around how important critical activity networks are. In terms of results, we've been nominated as a great place to work over the last 5 years with 90% score. We have got annuity income streams and happy clients. The industry average NPS is -18. Our NPS is +70 on 23,000 total client groups. There's a great line from Matt Berry where he talks about high gross margins are the most important single factor of long-run performance. The resilience of gross margins pegs companies to a level of performance. Gross margins are magnetic. If you drop your standards, drop your gross margins, it's very hard to fix that. And you'll see that our gross margins have been nearly twice the industry for basically our whole existence, and certainly stronger against a couple of global peers in Telenom and CBIZ. Our return on invested capital, return on equity, and owners' earnings are very, very strong. Similarly, very strong versus any global peer. So consistent revenue growth through 99% annuity income streams, EBITDA approximately double, the industry average and continually growing. Successful programmatic acquisition strategy, 40% return on equity, 25% return on invested capital, cash conversion of 100%. If you look at other professional service platforms across multiple metrics, you'll note that Kelly Partners is well placed to compete with any global peer. Many of these are much larger, and I'd point to our aspiration to continue to grow over time. If we continue to double the business every 3 or 4 years, then the business ends up at a significant size ultimately. CBIZ is Kelly Partners' most relevant US listed trading comp, and on any metric, whether it's revenue CAGR, EBITDA margin, ROE, ROIC, or cash conversion, our business looks very professional. There's a comparison in there that in the presentation that'll be available online, and I've shared the share price performance with you. In terms of highlights, there are 7 main things to understand about our organization. Everything you've heard is a result of being a mission, values, and vision-driven organization. We're an industry-leading disruptor in a highly attractive accounting services market. When I started with this business in 2006, most people thought accounting firms were essentially uninvestable. We've got an exceptional track record of disciplined founder-led growth, pursuing programmatic acquisitions to drive profitability and returns, annuity-style revenue mix supported by long-standing diverse SME client base, a unique partner-owner-driver model that we invented and trademarked that empowers our operators with equity in a platform that delivers operational excellence and enhanced financial returns, significant runway for continued growth within accounting services and complementary offerings, both in Australia and offshore, and a founder-led company with proven ability to deliver strategy and generate long-term shareholder value. I own 48% of the issued equity. Our partners own a further 10%. There's 58% insider ownership at the public company level, ensuring real alignment of interests. There's been plenty of scandals in the industry. We believe that the scandalous behavior of many of our competitors offers real white space to try and do something different. We have this business system that's well developed. We based it on what McDonald's does and businesses like Danaher. There's programmatic M&A delivering genuine returns over a long period of time and a large number of transactions. The annuity revenue continues to be our focus. We don't do things that are not annuity. There's a unique business model. All of this will be available online. Essentially, there's 12 parts of an accounting business. We're asking our partners to do 3 of those while we centralize the rest. There's a comparison to what a roll-up is versus our partner-owner-driver model. There's a massive runway for growth globally by growing now here in the United States and looking at the UK. Just the United States increases our addressable market by more than 15 times. It's important that the business has a business system and it's proven that it knows how to double. It's doubled that 5 times. And yes, it's small numbers getting to larger numbers. And for that entire journey, people have said to us that we won't be able to continue to grow, but we keep proving them wrong. We know that small businesses go broke at rates that they shouldn't, and we're very driven to help reduce that statistical reality. We know that death and taxes are certainties, and that tax is the number one government asset. Whoever raises the taxes owns the army. Whoever owns the army has control, and there's huge pressure on our type of taxpayer. We know that the Australian Tax Act has grown 14 times since the 1950s, and it's similar here in the US. It's even harder, 36th hardest place to pay tax in the world is the US. Australia's the 25th hardest, so it's even harder here in America. Accounting firms need succession. More than 50% of firms in Australia, the US, UK saying that they need a succession solution in the next 5 years. And what we're trying to do in building Australia's global accounting firm, there are many global accounting firms. It's just that there isn't an Australian global accounting firm, which is a shocking fact. We think we can duplicate here in the US the success that we've had in Australia. The market structure is exactly the same, and the issues facing the owners of these firms are the same. And so in terms of growth, We know that we've got a huge addressable market. California is GDP's fourth largest in the world, and more than 2 times the GDP of Australia. The population's 1.5 times Australia, and our focus, like we've done in Australia, to grow intensely in this area is the same. We intend to do that with our partner owner driver model on a 51-49 basis, use our growth partnership platform, which is where we do a 51-49 in a secondary market, and build through the global network. And I guess as of today, I'll leave that presentation with you. It'll be online. Happy to take questions in one